First of all, I would like to ask you, I see that there are already near 30 persons and we have over 100 of registered today. So some of you are reloading, I suppose, registering and so on. So let's get acquainted. Tell me please, where are you from? And the topic of our today's webinar is how to make investor love your startup. So where are you from, and do you have already some experience in contacting with investors? France. Kate, hi. Did you repair your... Yeah. Okay. I just asked our today's listeners where are they from, and we see
hello.
Finland, Ukraine, Germany. That is cool. Really international. Yeah. Switzerland, USA,
Israel, France.
So yeah, Kate will.
Very nice.
Kate will make a brief introduction.
Okay, great. So I will start the presentation. We have a bit, don't be surprised that we're speaking a bit strangely, because we have a bit like slow sound, and that's why sometimes we do not, we need some time to hear each other, to understand each other. Okay, so let's start. Today our topic is how to make a successful pitch, to communicate effectively with the investor, things that you need to remember, things that you need to think about when you present your startup to the investor. Can I just ask you, Nelly, to make the sound a bit less? Yes, and there is an echo. Okay, good. So now, is it better? Is it better? Okay, now it's okay. Good. So we see here today people from different countries, and that is great. We are based in Switzerland, and let me just tell you a bit about InnMind. It is a global platform, so we don't have any limitations. It is online, and we are connecting startups and investors from all over the world. And mostly we focus on European and emerging countries. So we saw lots of European startups, but not only. That is great. That is very pleasant for us to see you here. If you are not registered at InnMind yet, we invite you to register. For startups, it is for free. You can present your project, you can find interesting investors or experts in your industry, and you can, of course, read useful publications and explore the platform. So here in the chat you have a link now to the website where you can register. I will just briefly tell you a little bit more about InnMind, and then we can jump into the topic of the presentation. So as in InnMind, we communicate a lot with investors who address to us to find interesting projects. We are also ready to prepare the startups to communicate with the investors. So this is one of our expertise. We are helping startups to get ready with all the documents, to prepare the numbers, to prepare the analysis of the market and other things before they speak to the investor. And we basically bring their projects to the investor. We show and we help to make the presentation. Okay, so let's get started. Before I start, I would like to hear from you who already has a startup. Please write 1+, and who has a startup which is now fundraising. Please write 2+. So if you have a startup, just write 1+. If you have startup who is in the phase of fundraising, 2 pluses. Okay. All right. So Rao is not yet fundraising, and not even okay. So I see that there are some startups who are not fundraising, but can you then write like why you're interested in this topic? Those who wrote just 1+, because it's or you're looking for like just you're going to look for investors in the future, so you're interested in that already at this point of time. That would be interesting for us also to know. Okay, good. While you're writing, I will continue. Please feel free to ask your questions during the presentation. We will stop from time to time to answer your questions. So we will begin fundraising in 2 months. Interested in starting approaching in early stage, proceed. Okay, good. Thank you for your answers. So the structure of today's webinar will be the following. First, I will give a brief introduction of just general positions of startups and investors, who they are, what they are, how they perceive each other. Then Nelly will speak about pitch, and she will introduce this topic in detail. She will go just into each stage of the pitch, what should be included, what documents, what information, what you should speak about, etc., etc. Then I will continue with communication with the investor, speaking not only about the pitch, but more wide approach. So in general, what kind of questions investors might ask you additionally after the pitch, for example, and what kind of documents investor might request from you just besides your presentation. And in the end, if we have enough time, we will also give you some idea of top mistakes of startups, especially in their fundraising. And as I mentioned already, during all the speech, during all the webinar, we are really glad to answer your questions. So feel free if you have any questions at some point, or you want some clarification, or you have some comments, please do communicate it to us. All right, so startup and investor. What is a startup? It seems to be quite an easy question, but at the same time, we often face some entrepreneurs who start calling startups everything. So, like, whatever business it is a startup. It's not like that, actually. So, startup, first of all, primarily, it is something that is growing very, very fast. It is something that is scalable. And we also have one more feature, let's say, of the startup, which is the startup is actually developing in the conditions of extreme uncertainty. This I took from the one of these 3 definitions by Eric Rice, that startup is something that is developing under conditions of extreme uncertainty. Why is that? It's just because normally startup is connected with some new technology, with some innovation. So very often startups are discovering new markets. And that is also like additional risk of the startup, because it is really like for the investor cannot know, no one can know if this product, service, technology will be demanded or not. It is just the hypothesis that this kind of technology can be developed, and the startup is doing that, but then uncertainty is whether people will like it, whether people will need it. And that is why actually we're here with you today. That is why investors hesitate a lot whether they should give their money to this kind of business, whether they should invest their money in this kind of activity or not. So your task is to, let's say, both for yourself and for the investor, to decrease the risk. And we will give you some hints today how you can do that, how you can decrease this risk. Other points that I mentioned are taken also from those definitions of Steve Blank and Paul Graham, two very prominent and well-known entrepreneurs and professor, like Steve Blank is professor at Stanford, and Paul Graham, I guess you all know him as a co-founder of Y Combinator. So what is also interesting for startup is not just a consulting business or just like a business, I don't know, grocery shop. It's something that is scalable. It's something that can be grown very fast. On the one hand, it is positive side, but on the other hand, again, it's like a risk whether it will grow that fast or whether the momentum will be missed and then the growth will be not that fast. So it might sometimes kill the startup. Yes, so the startups, speaking about the risk, yes, it is highly risky venture for the investor. 87%, I guess you know this number, actually it varies. Sometimes they say 80%, sometimes they say 90% of startups fail. So this is statistics taken from Harvard Business Review, that 87% of startups fail. Here we just included different statistics according to years, like 25 fail after the first year, then out of those remaining 36 fail in the second year. So, and then the percentage is actually increasing and increasing. So this is for you to show that investor knows these numbers, and investor always keeps them in mind, that the majority of startups fail. And I can now add, it's not on the slide, but I can add you the number that for the investor, normally they consider that maximum one startup out of 10 that they invest in will be very profitable. Other 9 will be just like, it would be good if they just give some revenue, but they will not be extremely profitable. Can you define how do you, what do I mean by fail? Yes, of course. So fail, it means basically that the startup, first of all, it becomes a bankrupt. So the startup just stops existing. I mean, so it's exactly what I mean by fail. When the team is not working anymore on the project, they stop to work on the project. There is no activity. There is nothing which is done to develop the product further. So sometimes the reasons might be difficult. I'm not sure if we include this topic in today's presentation, but I can briefly tell you the reasons. Financial reasons. There might be problems in the team. Mostly it is the financial problem. So mostly startups stop existing because the money. They don't have money anymore, and we all people, we need to live somehow. So people are getting also burned out when they don't see the results, and that is how the startup comes to the decision just to close up at some point.
And in this topic, we will explain
we will speak about
the most typical mistakes startups make, and as Kate told, which can lead to the failure. So, sorry, Kate, continue.
Okay, yes, Dor, we will speak about the best ways to contact investor. Sure, we will speak about that on the next stage, in the next part. So, who's investor, right? We see lots of startups who speak about investors as some people having lots of money and ready just to throw this money away to, I don't know, to any kind of project, to any kind of team, just for a nice smile. It can be, for some investors, maybe true, But the majority of investors are seeking to get additional profits, and they are not just ready to throw away money. They want to invest and want to get higher revenues when they get back. Yes, when after a while, after 2 years, 3 years, depending on the contract, they are expecting the startup to make them money, for them. So it is not really correct to consider investor just as a just as a bag with money. Okay, these are also like people who are having their own expectations, and investors see themselves as really just walking on the edge all the time. That's why negotiations with investors and startups, they take lots of time, because investor is trying to assess all the possible risks that might occur on the later stages that maybe are not visible at this point of time when they negotiate, but maybe will come up later. So investors are really all the time at the risk. So speaking now about different types of investors, and first, like what kind of investors you need to contact with at different stages. Here is just like a picture. It goes from down like to up. On the bottom, you have like, imagine that it's the beginning of your project, and at this point, normally, the major source of your finance is your own money, so it's bootstrapping, plus your family and friends. So on the very early stage, you're just using your own money, the money of the team, the money of the friends and family. And at this point of time, you start checking like whether this product might be interesting. Ideally, you start checking. So you start developing your product, you start considering and analyzing the market, and going forward. Then at the next stage, yes, exactly, Anna, this 3F, fools, family and friends. But we decided here to go like for team, family and friends for this notion. At the next stage, when the team is understanding that they need more funds to develop, they go for crowdfunding. Not always. It's what I'm saying now here. It's like it doesn't mean that it's like a rule, but it's something that that is kind of like standard or more or less conventional way to consider the investment. So then goes in the amount, it goes like crowdfunding, because normally you cannot raise millions in crowdfunding, but you can raise some thousands. And also what is good in crowdfunding, that you can already acquire some first testers, some first customers and users who will be interested in your product, who are already interested because they invested some money and for example, they got some test version. So this is very, very good way to fundraise on the early stages. But then at some point, when you understand that these funds are also not enough, you can address, in some cases, to traditional lenders like banks. But there is some specifics in this kind of investments, because, well, it's not.
So Kate again has some problems with the connection, I suppose. I would just like to add that, for example, among these mentioned types of investors, angel investors, venture capitalists, incubators, they are presented on InnMind. So if you register on the platform, you will be able to get in contact, in direct contact with interested angels, business angels, venture capitalists, and incubators, representatives of such kind of investment platforms. So yeah, Kate, are you okay now with connection? Yeah? Mm-hmm.
Mm-hmm. So can you hear me now? Okay, perfect. All right. Okay, so yeah, just write to me if there are some problems, because normally I see everything, and I don't realize when there are some problems with connections. So okay, I don't know on which point you heard me. I was speaking about lenders, about credits. It is not an easy way for startups to get a loan. To raise this kind of money, because normally banks are asking for lots of tons of documents, even much more than the investor, because banks are trying to find less risky investments. So they normally don't like it. But if you have already the first profits, then you might address the bank, but not on the very early stages, as you can imagine. Angel investors, this is really business angels. Yeah, this is really a good way for startups to consider. They can vary in terms of the conditions, in terms of the amount of investment, in terms of their contribution, not only financial but expertise or networking. So they might also offer you different types of conditions. Shonish, can you hear me now? Does anyone else? Okay. Does anyone else have problems with the sound? Let's just check the sound. Could you write plus if you hear me okay, if the video is fine, or minus if you have some problems? Okay, it's okay. All right, so yes, for those who do not hear, I would just suggest probably closing the page and opening it once again. Okay, so I continue. So business angels, it's very, very good group of investors for startups, because they might be very, very different, and they might be quite flexible to look at your conditions. And it is good to approach. It's good to approach also investors with some expertise. And this, I would say, we would also speak a bit more about smart money on the later stages of the presentation. Next group of investors are incubators. They are quite bigger ones, and incubators and some accelerators. So incubators and accelerators, they might invest starting from $500,000 and more, depending on the size of the incubator, depending on the condition, once again. And what is good in them, that they provide lots of networking opportunities, and they also they introduce you to the experts, and they very often they can introduce you to the investors for the next stages, for the next fundraising stages. Venture capitalists, and I would also add corporate funds here. So they are ranging from also about $500,000 and up to very big amounts of the investment. So if you're already not on the first stages or early stages of your startup, you definitely need to go for venture capitalists. It depends on the venture fund. Sometimes they do provide additional things like expertise, but not always. So this is something that you need to consider as well. So this slide basically shows approximately the stages and the amounts of the investment, how they're ranging. Yes, so here you can see just like crowdfunding, business angels, and venture capitalists. There's three main sources of money after bootstrapping already, and the goal which can be in mind of the investor, right? Because you are basically, when you're speaking to the investor, you need to think. It's the rule of negotiations. You need to think what is in mind of the person just on the other side of the table. In mind of the investor, it's a profit. But when you speak about, for example, crowdfunding, it's more product. They are more interested in your product rather than getting something like profit or money back. All right, good. And just to finalize this introductory part, I would like to I would like all of you to think once again who are fundraising or not. To think once again if you really need an investor. Because lots of cases that we face is when a startup is focusing not on acquiring a client, but on acquiring an investor, right? On just communicating and spending a lot of time, a lot of resources on finding an investor, when the startup already can communicate with clients. It doesn't mean that it's always the case. There are some projects where some investors are really needed, but there are also lots of cases when not so much money on the early stages are needed, and startup can really progress without this additional resource, financial resource, let's say, just by contributing their own time. So bootstrapping, the big advantage of bootstrapping is that you are in charge of your business. It is a big responsibility, but at the same time, you don't have people who are constantly telling you what to do. It might be the case with some investors, because they might also request some control over your startup. They might also be like key decision makers, even if they have like 10%, but this 10% might be really some dominant, let's say 10%. This is something good about bootstrapping, right? You are in charge of your own business. You are setting the direction. The disadvantage would be that you have to do it by your own. If you address to the investor, you might get like smart money, you might get experts who are helping you to develop your product, who are mentoring you. You have the network, so you might be introduced to some industry leaders, to some potential big partners. You might be also, if the investor, for example, is investing in several companies, investor might introduce you to some other like network and already developed probably clients of other similar or parallel products. So it might be also like this big effect of networking, of database of clients, of database of potential clients and partners. Yes, the creating MVP doesn't cost much. It costs a lot of time. Yeah, well, it depends which product you have. It might cost you more time if you don't have much money, but it can be done really without real like significant investment of financial investment. And we always should remember about this lean strategy of startup development. When you build something small, you measure, you learn, and you can continue understanding, like this with small steps approach. So you build small things, you build small feature, you test it, you communicate with your clients, and this you can do without going for big money. And here, basically, what I'm just opposing, time versus money. So we highly recommend on the earliest stages for startups, do not run after big money, but just instead of that, invest a bit more time. It is hard work, yes, you need time for that, but it is better if you just invest your time, check your hypothesis, check your product, rather than investing lots of time to acquire money to get this investment and then just to lose this money because you didn't do your homework properly. All right, so I guess at this point you have an understanding whether you need investor or not, and you have an understanding in your mind what kind of things investor would think about. Before we continue to the next part, like the pitch, do you have any questions? So I had a question previously from Dror about the best way to contact investors. I would just briefly now answer your question. So you have, first of all, you have different events. Yes, it doesn't mean that you have to go for all the events. You need to pick the most relevant events in your industry where real investors would come, because we know that at lots of events who are sitting in front of us, like in front of the startups, are not really the investors. They're just like some analysts or some experts, but not real investors. So try to research the market and try to see where you can really find investors. I would also recommend you to...
We have, again, some problems with Kate's connection. Yeah. Okay, you're again here.
Okay, so now is it fine? All right, yeah, so you can also consider like different newspapers following the news, not newspapers, I mean like following the news about the investments and about the active investors, just to see, to analyze who is really investing in startups and who is just creating this kind of activity, visibility of the activity. About going to expensive events, I am not saying about going to expensive. There are lots of events which are for free, and if you try to go as, for example, what is expensive? Expensive to give a stand, to have a stand at the event. This, to be honest, proves to be really not very effective, because investors are not looking for, in the majority of cases, they're not looking for startups at this kind of exhibitions. So getting a stand, I would not really recommend you. This is expensive. But for other events, try to find those that are either free or really cheap. And I'm sure you will find lots of them. So this is one type of the channel, let's say, how you can find the investors. Then you can find investors using, for example, InnMind platform. You already have the link here. So we are trying to keep only relevant investors, only those investors who are working with startups. If you have questions about them, about their activities, you can always address to us. Now moderators will write the email where you can to which you can write and ask us questions if you want to check some particular investor, or if you're looking for if you are in active research, you can also address to us and we can help you in that. So we are also helping in that. Other ways to find investors is, yes, to be listed, to list your startup in different directions, like different websites. We have a list of these kind of directions also in one of our publications, and we'll send you just in a while this list. We'll send you this list where you can put your startup. Okay, so I think we can switch to the... Okay, there are some more questions. LinkedIn could be one mode to connect. Yes, Shionesh, yes, LinkedIn might be a good one to connect, but be careful, because do not, just for the startup, do not spam investors, because sometimes they are really surrounded by lots of like requests. They are followed by some startups, but try to give them really relevant information. Try to, first of all, find the relevant investor who would be interested in your industry, who would be interested in your type of startup at your stage, etc., and then already start writing sending information to them. When I find an investor I'd like to meet with, how should I contact him or her? Okay, so it depends where you find the investor. If you find the investor online, it is of course a good way to write an email, but as I mentioned, do not spam your investors. Try to make, like, first email brief, concise, and up to the point. So try to give relevant information. Okay. Nelly, I'm giving the word to you now. Please go ahead
thank you,
and
Kate.
speak about
And
the pitch,
just to add a small comment regarding what you have already told about contacting with investors. Dror, I suppose you have asked this question. One more way can be just looking in social media if you have already found the investor, as you wrote, which you are in, who you are interested in, and you want to get in touch with him or her. Find their social media profiles like LinkedIn, Facebook, Twitter. Depends on their basic channels. Try to follow them. Try to engage with them during their posts and comments and so on, and then it's one more additional way to get in touch with the person who interests you. Send them the link to your project, the link to your project description on InnMind, and then start negotiating. So yeah, it was just a small comment like this. Thank you. We are moving forward to the presentation, and now I will try to help you to understand what should be really included to the startup pitch. It is not the comprehensive guide, so we will cover the basic topics, the most important ones, which investor needs to know and to see in the startup's presentation and investment pitch. So first of all, you know, many startups make such kind of mistake during their pitch or presentation. They speak a lot about the problem and the market and the customers, competitors, but they forget something really important. They forget to explain what they are doing and why. So Guy Kawasaki, I suppose all of you have heard about him. He told that if you answer the question, what are you doing and why, in the first seconds of your investment pitch or in the first slide of your presentation, you will be already better than 90% of other startups. Because as far as I told, when startups began, from the very beginning, they start moving into in the market and solution and so on. Investor is just guessing and okay, what is the product and what is the project about? So first, identify, make the clear explanation of what are you doing and why. The question why is connected with the problem. So you should identify the problem of your customers, of your target audience, and then how do they deal with it right now? What solutions do they have right now, and why do they need really your solution? Then present your solution. So describe how your project, your service, your product, your technology will help your potential customers to solve your problem. And highlight key advantages. So why is it so necessary for the customers to purchase your product? This is one small slide, but with lots of meanings. I mean the market. So when you have identified your problem, when you have already explained your solution, then you should talk about your market. How huge is it? No, first I would say about audience, target audience. So I suppose many of you heard the term the portrait of your target audience. Did you hear? Did you know this already? Say plus if yes, and minus if not. So why is it important to identify your target customer? Okay, thank you. Most of you know about it. Why is it important? Because, well, when you know exactly who are your customers, they are men or women, kids or adults. They are speaking English or they are speaking Indian. They are living in the house or in the hotel. I don't know. You will be able to market and promote your product and deliver your technology to these customers much more effectively. Many startups make a mistake when they think that it is not so much important. Why do I need the portrait of my potential customer? Well, it doesn't depend. All the world are my potential customers. For example, I will give you the case. The startup with the fintech solution for accounting. So first they thought that the potential customers are entrepreneurs, because entrepreneurs want to get rid of the accountants and they want to use some more simple solution to make accounting themselves. So they addressed their marketing message to the entrepreneurs, to the business owners, the directors, CEO, CFO, and so on. But finally they realized that their target audience are not entrepreneurs themselves. They are accountants, because their solution help accountants to save time and to make their job much more easy. So this is the exact example of how important target audience is, because when they mixed it and when they make a mistake, when they thought that their target audience are business owners, they addressed their message to them and they didn't have sales. Nobody purchased. So calculate market size. Regarding market size, there are also lots of mistakes and misunderstandings, because in your presentation to the investor, you should not only write the numbers, the general market of the global pharmaceutical market is many billions of euro, and that's it. And you think that investors should be shocked and invest in your project directly in the second. No, that's not correct. In your presentation or investment pitch, you should prove the numbers of your market size. It is better if you take the so-called target available market, so it's a huge market, and then you put the numbers, you calculate, you take them from the open information sources, you take the volume of the market, the growth range, the growth rate, and then you identify your specific segment of the market. For example, if you produce some food for dogs, premium quality food, nutrition, I don't know, healthcare, food which makes dogs happier, your target available market, a huge market, it is the market of the food for pets. And it can be billions, I don't know the numbers of the market for food for pets. But your specific segmentized market is the market of the premium food for dogs, not for all pets around the world, but only for dogs and only premium food. So this is the example of market segmentation. And of course, the size of this target market will be smaller than the size of the huge global market. Competitors. This is also a very important part. So just to understand, you don't need, like we did it in one slide, you don't need to put all this information in one slide when you prepare your pitch to investor. You can make each slide for each segment of this market information about the market. So you can make a separate slide for customers, separate slide for market size, separate slide for competitors. So it's not necessary to put everything in very small letters to the one page. So speaking about competitors, you should identify your direct competitors, the most important ones, which are already playing on this market or targeting the same audience. And it would be even better if you could also mention your indirect competitors. This is also the huge mistake of the startups when they come to us and they say, or to the investors, and they say, we don't have competitors, we are unique. No one can provide the same solution. But you know, competitors are not only the companies which provide the same solution or which develop the same product or technology. Competitors are potential substitutors. So alternative solutions, how your customers can solve the same problem. For example, as far as I remember, Kate loves this example for the competitor of the printer can be the the typing machine, the old-style typing machine, or competitor of the reading application could be traditional book actually, or web application, competitor of the mobile application. So that could vary a lot. I see the questions. Sorry, what is the best volume for the presentation? Yeah, what is the best volume for the presentation? It depends on what stage are you preparing the presentation. If you make the first speech during the event, for example, in front of lots of investors, it is better that you make your presentation maximum 10 slides, and without not too much information included to the slides, so everyone can see this, and then you add additional information with your voice, just describing and speaking. But if you are already negotiating with the investor, so he has seen already brief description of your project, and he told, well, sounds interesting, send me the detailed investment presentation. Then, well, it could vary, but actually it is from 15, 17 slides, I suppose, to describe all the necessary information which investor needs to consider in order to make decision to move forward. Hope I answered your question, Anne. And regarding coming back to the market, yeah, thank you. To the marketing plan. So marketing plan, it is also an important topic and direction of your business development. So this is about how you will promote your product or technology and how you will deliver it to the potential customer. It includes the selling model, it includes the marketing channels, so how you will just spread information about your product. And I hope all of you understand that if you come to the investor with the marketing plan, which includes, for example, millions of expenses for the TV advertisement, no one investor will consider it as a sane proposition. So startup marketing plan should be really well designed. You should think a lot about it, how to find the most effective and low-cost solutions to market your product. Sorry, I will be a little bit quicker because it is already 1 hour or less. So team and performance. It is also very, very important part. So don't underestimate the meaning of the team. Present to the investor your core team, your founding team. It is live in marketing. Present to the investor your founding team, key competencies, how each of them can contribute to the project and has already contributed. what risks have been already taken by the founders. What I mean by the risk of the founder, I mean that especially right now, there are lots of startups on idea stage who yet made nothing and invested nothing to the development of their project, and they come and pitch to investors for fundraising. And we communicated a lot with the investors, and we heard from many of them that when they see such kind of founder who wants to put all the risks on the back of investor, they take the decision to reject the project very, very quickly. Investor wants to see your motivation, but motivation is also goes from the risks. Did you take a risk to invest your own funds, which you kept to buy the beautiful car 1 year later? How are you motivated? Do you put all your skills and time and money and competencies to the development of your project? So it's important for investors to see that founders are motivated. They don't want just to take the money of the investor and only then to invest their time and skills and so on. So yeah, ambition, competencies, motivations, and risks taken. Present your founding team. Present your core team members. Why are they able? Are you able to execute this project? You should both in the written presentation and especially when you make the presentation online or face-to-face with the investor, make your best to prove that you are able to do it. Not only by words, but by facts. Why it is you who are able to execute this project. So yeah, founders assessment. It is also the part of the question of the team. So I should tell you that near half a year ago, we on InnMind made our own survey of how do investors make the decision while startup assessment. And we discussed, we have over 400 investors on InnMind, and near half of them participated in this survey, I suppose. And we asked them all the questions about the most important criteria on which they base their investment decision. And you know what? Most of investors underlined that founders and founding team is one of the most important criteria while making the decision to invest or to reject. So the positive factors in the founders assessment are listed in these slides. So yeah, investors told us that they want to see in the founder leadership skills, organizational skills, ability to listen, to understand, to not to dispute without any reasons, but be able to listen to the external advice and to make decisions and to implement this advice to your business development strategy. Effective communication skills with external audience as well as internal. Investors don't want to have a team where founders hate each other or compete with each other. No. They want to have a real team where each founder complements the other. So yeah, of course, in addition to communication skills, it would be cool if founders have some experience in the industry if they have business experience. It is not, it is not necessary. Many people say, yes, of course, obviously, that if you have already started several successful businesses and you exited with a profit, it is cool. It will be a huge plus to the investment decision. But if you don't have business experience, it is not the barrier for the investor to make the positive decision. If you demonstrate that you are able to learn fast, that's enough actually to start the business. If my project is now on earliest stage, should I already search for investor? What do you mean, George, by earliest stage? While you're answering, I will move forward. So negative factors of the startup assessment, what investors find to be negative actually, it is when founders tell a lot of loud words, let's say so, when they demonstrate their ambitious ambitions, but without facts, but without proof, but without concrete numbers. It is never good for a startup founder. Weak organizational skill. So if you are not able to organize your team, to find external outsourcing support, to invite or to strengthen your team with additional skills, with additional professionals, without spending tons of budget for this. So if you cannot solve your problem on the small scale stage, this means actually that you will not be able to solve these problems on the large scale stage. Investor wants to see that you can make a decision and you can be a good organizer. Serial winners of competitions. Yeah, many startups think that if you participate every week in different competition, if you have lots of prizes and lots of certificates that you are the winners, this is the positive factor for investors. Not at all. Investors, as Kate already mentioned, they are looking for business, for money, for the profit. They are not looking for showmen who can be well presenting their projects on the, in the crowded room. So serial winners of the competitions usually are considered by investors as people who are wasting time and maybe money for the publicity, for the show, instead of really sitting in the office and working for their project development. So we can finalize now the founder's assessment and go to the other information which should be included to the investor's presentation. Stage. Of course, it's important to mention on what stage you are now. Are you idea stage? Do you have MVP? Do you already have team members in addition to founding team? Are you scaling? Are you entering external markets? So stage should be well defined and described. Business model. That's an important factor which is very usually, unfortunately, forgotten by the startup founders. So described, how will you able to make money with your project, with your innovative technology, innovative product? How you will make money? How you will sell your product? What is your monetization model? What is your pricing model? What are your distribution channels? So it is even better if you include the business model canvas. I suppose many of you know what is the business model canvas. There are existing several canvases like Alexandra Osterwalder and Ashma Uria and some others. So maybe our support team of moderators will send the links to some of the canvases. Some of them are available in InnMind as well. Financial forecast. So you should briefly, many founders of the early stage ask, but how can I make financial forecast if I don't have any incomes, any revenues? But you know what is business planning? I mean, not business plan, but business planning. When you plan your business, you plan some kind of revenues, you plan some kind of profits and expenses, so they should be put online, and you should make some forecasts for at least the next year. Some of the investors, they ask for the 3-year forecasts, but you know, in standard situation, if you have 1-year forecast, it's already okay for the investor. They will not insist. Size of the investments, yeah. Also, many startup pitches lack of this important factor. So they are looking for investors, they are looking for the funds, but they just simply forget to add the small sentence or the small slide explaining how many money do you need, guys, and for what purposes. So do you need 100,000 for the MVP? Or do you need 1 million for marketing? Or do you need anything else? So don't forget to identify in your investment pitch how many do you need and for what purposes do you need. Yeah, just to finalize, for you to remember, you know, like at school or university, again, repeating, problem or pain, solution, market, team, financials. These are the 5 most important things which should be described in the investment presentation. And by the way, I want to ask you a question. How do you think, what is more important for investors? So it is always a dispute. What is more important, finances and numbers, or the founder's charisma? So how do you think? What do you vote for? Both, Juan? Nobody else knows? Nobody else has opinion? Balance, charisma, market size, so meaning numbers, I suppose. Team. Matthew, charisma. So very smart founders are today. This is one of the conclusions of our report based on our survey of investors. So 4 out of 10 investors think that charisma is the priority. So charisma, you know, meaning not only the showman skills, charisma meaning the team, the founders, yeah. And 6 out of 10, they pay much more attention to the figures. So you see, it is not so huge differences. It is not 1% and 99%. So don't forget, just keep in mind that team is pretty the same important as the numbers and financial data. So thank you, guys. I finished with my part. Do you have any questions? Or if you have some, you can answer them later during the presentation, and I will give the word to Kate, who will tell you about communication with investors. Yeah, thank you, all of you.
So yes, I would like first just I saw some questions that probably Nelly did not speak about. So first of all, and some of the questions that she already discussed, but I would like just to comment on them. There was a question about the size of the presentation, and yes, the presentation has different purposes. First of them, it might be informative purpose. When you're just sending your presentation by email to your partners, to your potential investors, then it's one thing. it can be like more, let's say, detailed with more information about your stages of development, about like more, probably more information about your customer development, what have been done, etc., etc. And then if we speak about the presentation that you are using when you are in front of the investor, that would depend really on the amount of time that you have. If it is just 2 minutes of the presentation, it's one thing. It can be just like a couple of slides. If it's 5 minutes pitch, then it can be a bit more. It can be probably, I don't know, maximum 7 slides. If you have just an elevator pitch, we also had questions about elevator pitch, so it might be just 1 slide. Elevator pitch, I mean like this 30-second pitch, and there was also a question about that. So I would like to, before continuing, I would like to speak about that. This is quite a tricky thing on the one hand, to present so many things, all your work in just 30 seconds. But at the same time, you don't have to go in all details within these 30 seconds. You don't have to give all the numbers, all the information. The main thing is to get the interest of the investor, and you can do that by different means. So what I would ask, what I would recommend you just concentrating within these 30 seconds is the crucial question: what you are doing. So what project you are working on, what is it about, which problem it is solving. 30 seconds, you have, like, you can say about 3 sentences. So don't try to make the sentences like full of data, full of numbers. It is not so necessary, but try to make this as impressive as possible. I like this example that I basically just saw a month ago when I was visiting a conference in Paris. There was a startup who really brilliantly, in my opinion, taken attention of all the audience. Everyone remembered him after this 30-second pitch. Even though there were like, he was not the only one presenting, there were like dozens of startups, but in the end, everyone really remembered him. So what he did, he really emotionally, he took the emotion of the audience when he was introducing the problem, and his solution was so memorable because the problem was so close to everyone that everyone was thinking about the, oh my god, this like problem might be really like, I face this problem as well. And then the solution, I also need this kind of solution. So everyone could feel the necessity of that. If you would just say like, okay, our target market is this and that, and we want to speak to this kind of group. So just I will give you this example. The guy stood up in front of everyone. He raised his hands. First of all, it was drawing attention of everyone because he was standing like this. You know, it's not natural position, first of all, so it already took our attention. And he was saying, like, look at these hands. These hands, now, like, 100% of people in this room now will be shaking hands. And then he gave actually some numbers. I don't remember the numbers already, but he gave the numbers like how many people die from the diseases that are basically transmitted by the handshake in one particular country, because they are targeting France. So it was data about France. So he gave the number, how many people die from this kind of diseases per year. And then he said how much it costs to the economy, but it was like also the detail that I don't remember. But the thing was that I remember that exactly I was thinking, oh my god, I'm going to shake now hands to these people, and who knows like what risks I'm taking by shaking their hand. And then introducing this problem, introducing this risk and pain, let's say, it took him like 15 seconds. Like, I don't know, maybe 5 seconds just to give brief information, data about amount of people who die. And then he says, and we have the solution for you. We just want to put this like disinfection I think it was kind of disinfection filter on the entrance to the room, which you just put your hands just under that, and it disinfects your hands. Such a simple solution, you know. It's like not a really like just outstanding technology. It's very simple nowadays. We have more sophisticated technologies, but everyone remembered that because the pain was really close to everyone. And I saw this guy, he was, all the evening he was speaking to lots of people. And I can imagine that lots of investors came to him just because the way he presented the problem, it was great. The way he presented his solution, it was just outstanding. Everyone remembered. So this was, for me, a great example. He didn't start like this. He didn't say, okay, so we are a solution, or for example, we are creating the stands where you can disinfect your hands, and this will help to economize the country, the economy of the country, this and this amount of money. So imagine he would do that, no one would remember him, because no high technology, no really some great invention, and people are just, okay, so why do I need it? But he created this kind of need. This is also one of the tasks of a startup. First of all, you need to create a need. You need to create an understanding in your client that, oh my God, I need it actually. Okay, so this is just speaking about the pitch. This was an example. And yes, once again, to summarize, don't try to put all the information inside the pitch. Just try to put the relevant. And you might need to have several pitches depending on the target audience you're speaking to. Because at this event, we were lots of people who came for networking as well. So apparently he could understand that these people would be shaking hands. And these people would see the problem in such a way. Because other target audience for this guy was like hospitals. So I can imagine that if he comes to the, for example, some medical conference, he would start his pitch in completely different way, just because the audience is different. So try to analyze the audience that is listening to you, and then give the pitch that you have prepared. So in short, elevator pitch is a pitch in which you present to investor within the short time you get into elevator with him and should get finished before. Yes, Shivanesh, yes, it is originally the idea of the elevator pitch, right? It's like something like where it takes its name when you're just in the lift and you have around 30 seconds maximum just to give your idea. Yes, it's true, it's the origins, but now they're just using this name just to give 30 seconds to the startup to present everything. All right, so your communication with investor. We have discussed today in detail your presentation, your pitch presentation that you would present to the investor. I would like to ask you a question. What do you think on the initial stages of your negotiations, even like with on the initial stages of your contact with investor? What kind of document you think you would need? So you would need the presentation, right? We discussed already. What other things you might need to present to the investor? Like imagine you are approaching investor and you already discussed some things, and then you need to send something. What kind of documents you should have in your hands just ready for these kind of occasions? So executive summary, pitch deck. Other opinions. So other things that should be business plan, balance sheet, business plan. Okay, all right. So I will move with that. Let's say the majority, half of people said about business plan. Some people, okay. All right, so here are the documents that you would need initially. on the early stages of negotiations. You will definitely need a presentation because it's visual. It helps investor to understand the idea. It helps to let's say, to give you some more details and some basis of your product, of your market, of your competitors, what just Nelly explained. You need executive summary, so it was the right answer. So it was like exactly that investors are requiring one pager or some summary of the idea. It can be actually presented in this canvas format. So just like on one page you have everything. On one page you don't have like all the details, but you get the general information about all the aspects. And of course, investor will request financial plan. So investor will ask already on the early stages, like what kind of money I can earn, because this will give him an idea whether he should go for that, whether it's like a scalable business, it has like lots of potential, or it's not interesting for him to spend money on, to spend time on, sorry. Yes, and money as well. About business plan, in particular, we asked this question in our survey, in our research that we conducted last year. And we found out that only 1 out of 10 investors request business plan, and not on the early stage of the negotiations. Just later on, the investor said, if we really feel that we need more additional information, we do not have enough, we are requesting business plan. So this is quite an interesting finding that we, when we realized that lots of startups are preparing business plans, and they're preparing business plans for the investors, but investors in the end very often do not request it. In my opinion, I would just like to tell you that it doesn't mean that you don't need business plan at all. It doesn't mean. Because very often business plan would be actually the document for the founders themselves. So it's not only for the investors, just to show like these 40 pages, but it's also in the team for the founders, if there are several, to be on the same page, to understand that you are going in the same direction, that you are basically following, you have the same key message that you want to transfer to your clients, to your customers. And this is like a strategic development for you. Yerlan, yes, financial plan and executive summary, it's a part of business plan, but business plan actually includes some more parts which are more expanded to, so it includes many more parts in it. Some parts would be really necessary to the investor, but some parts would be just something that he would not need at this early stage. Okay. So, and now that we spoke about the main things that you are presenting in your pitch to the investor, imagine that we had an ideal presentation, we gave all these stages, all these steps, necessary information to the investor, and now what is next? So the investor might ask you some tricky questions. Here we listed a few questions that we hear very often from the investors. So first of all, investors ask, what is your exit strategy? Because once again, coming back to the main goal of the investor to make money, they would be many of them would be highly interested in exit strategy, how they can get money back. So it can be other investment round, they can resell their share, or it can be IPO, but also, so basically you as a founder, you need to be ready for this kind of question. You need to understand for yourself inside your team whether you are what kind of exit strategy you are going to take, if any, because it is also an answer if you're saying that we are not going for like IPO in the nearest years, or we are not going to sell our company to some big corporation, for example. This is also an answer, but you should be clear about that. You should be ready for that question. So if the investor, because it doesn't mean that all the investors will look for exit, but already at this stage it will save your time, investors' time, just to understand that you are looking probably in the same way on your business or in different ways. So this is important for you to find out.
Okay, it again has some problems with the connection. So I will mention. Yeah, you returned.
So, can you hear me now? Yes, can you hear me now? Okay, I don't know. I'm really sorry for this because I don't know what's happening. For me, it seems to be everything like fine. So I don't know what's happening with the sound today. Okay, the second question. So how do you earn money? It is about your monetization model. It can be like one way to earn money, or you can have like a few ways, like freemium model, or like the payment for the subscription, or the payment for the advertising, or like some commission. So it can be different ways. You can even mention several of them. But I would say that investors, what they mention is that first of all, you need to concentrate or focus on one or two of them and test these kind of models, and then go and try to take the other alternative strategies of monetization. Another very important question is about equity distribution. How is equity distributed, and how did you calculate it, and why? Because the investor is coming and he's taking some shares, so he wants to know what kind of room you have in your share. So whether on the early stage you already had like 50-50, for example, like equal share division. Yes, and maybe you had like I don't know, 10% and 90, and then the investor will ask like, how did you calculate, based on the time invested, based on the money invested, or like expertise, etc. So he wants to know how people are involved, and then he wants to know whether other players can enter on the furthest stages. Or this is also can be an alarm for the investor if he comes and he sees that all the shares are really like, there are many shareholders. Let's say there are several investors who already came to the startup before. They have like 30% of share, or maybe 50% of share. This is like an alarming note for the investor, because he thinks, okay, the founders themselves have less than 50%, for example, and then he might think that the risk is that they lose motivation at some point, and they're not the ones who have the majority. The majority of the shares, for example, are holding those people, are held by those people who are not key players in the team, but just because they invested money, but they're not really fully involved in terms of their time, resource into the project development. So this is also an important point for the investor to be clear about. And another tricky question which investors might ask you in some cases, it is not that often, but if you face this kind of question, that would be really, you might be really surprised by that, but it happens. Investors might ask you if you're ready to give up or delegate your manager's role. So either you, for example, if he thinks that you are not experienced enough to lead this project, the investor might say, okay, I like your idea, I like your product, I like what you have done so far, but when I invest in this project and I take my percent shares, for example, 10%, let's say like 5%, 10%, I want to put another manager to lead your team. So the investors want to see whether you're ready or not. And your answer might be different, like you can say yes or no, but just you need to analyze what you need most. You need to be the owner and the manager of your project, or you want your project to be successful and you want your project to be yes, Shivanesh, I'm referring to CEO, but also it might be CMO. So basically I'm referring to manager as any C-level co-founder, like CMO, CTO. It can be changed by the investor. So investor might say, I don't like your CTO, like just if to say directly, yeah, I don't think that good strategic thinking, so I want to put my CTO, but like the shares of your co-founder will stay with him, of course, but the decision-making power will be given to other person. This should be also clarified in the mind of the co-founder whether he or she is ready to give this kind of role or not. There is no one unique answer to that. So it really depends on you.
So again, problems with Kate's connection. I suppose she will return very, very soon. Yeah. When I start telling anything, you return to Swiss.
Yes. Okay, so, all right, good. So, and the next thing that would be discussed in more details when you already negotiate with the investor, it was already mentioned, this like all these 3 points, but just to put them once again, to draw your attention to them. Evaluation of your project is very important, because we heard from investors that if the startup comes and the startup doesn't know what is valuation of the project, then the investor would just like, you don't know how much your business costs. So, I mean, yes, not all of us are financial specialists, but it is your business, it is your project, so you should make sure, you should find the means to calculate your valuation. Shivanesh, I'm not sure if we have enough time to speak about that today, but let's. Okay, I will just ask you to write to us by email this question, and then we might discuss it separately. So the next point is option pool size, that I also mentioned about equity and how it's divided. So how many people are having shares in your startup, and how much room there is for the new investor to come into your startup. This should be defined. And the next one, and basically these 2 points can be also, like, they're actually interconnected. So you as a founder should be aware of how much, what is the valuation of your startup, and what is the percent of share that you are giving, and this will also influence the amount of money that you are requesting. So all this is interconnected. If you are not in the early stage, so yes, answering this question about valuation, I will give just one of the options how you can evaluate. If you're not on the first round, if you already had previous investment, your value will be calculated also depending on that previous investment. So for example, the previous investor gave you, for example, 150,000 for 10%, and then you think, okay, at this stage, when he gave me this money, my project was like 1.5 million. Yes, and then you think, okay, after that we have developed this and that, we have invested our time, we have invested our money, so it increased, but you already understand that you cannot go backwards. You cannot ask like the same amount for let's say for early stage startups get really high valuation, and they get, for example, like $500,000 for 5%, let's say, then they might have a difficulty on the next stage when the new investor comes and he says, okay, you know, like this valuation, I don't know how you came up with this, but I don't agree with that. And in this case, yes, there might be reevaluation and renegotiation of what you already had. But here, that would be in the contrary to the interests of your first investor. So this is very tricky question here, and this is very tricky situation. And it would depend on all the three sides, basically, like all the three sides: your first investor, your this current investor who is thinking.
Kate again has some problems. Yeah, as she correctly told, that valuation of the startup is very, very specific item. Yeah, Kate, I didn't tell a lot, so you can continue.
Yes, so I'm here. Yes, I heard actually everything that you're saying, so I don't know why my video or my sound is dropping, so or like what is happening. Okay, so rights and responsibilities here, yes, you need to understand whether you're actually raising smart money, or you like smart money meaning that you are asking not only for financial support but also for expertise, for networking, for partners search from your investor, or you are just wanting the only money from your investor. This can be also the case, like the investor just gives you money and he's just, okay, you can come back to me after a few months with the report of your activities. It's not often this kind of case, but it happens.
And by the way, very often
or
investors
the investor
prefer to give just money, because for them it's really easier than to be involved into the startup development, to share their network, to help with the questions of growth and so on. But you should decide, first of all, from your own interests. Focus on what do you need. If you think that you have all competencies on hands in house and you need just money, so you ask just money. If you doubt that you have enough competencies and enough resources and enough contacts and so on, it's better to ask help from the investor. Because money is not the only thing which is important. Sometimes a good contact, a key contact with some strategic partner or a huge corporate customer could be even more important than the amount of the investments.
Yes, definitely. So we also have an article on InnMind about smart investment. We will send you it a bit afterwards. Just the role of the smart investment, why you should look at the smart investment or not, depending on your case, on your interest. Okay, so I don't know if we have enough time to speak about top mistakes. Basically, we are already like 1 hour and a half. So let's do like this. You all will receive the record of today's webinar, and you will also receive the slides. We will also share the slides with you that we prepared for today. let's do like this. I would like to invite you now to ask your questions, if you have any questions, or maybe something that we did not answer previously. So we had actually a question about earliest stages of startups and whether the investor should be addressed already on the earliest stages. This question, and we had a question also, more like a comment about good storytelling skills of the founders during the pitch. So I will just give the comment about this storytelling skills. I think it was a question from Shivanesh. Good storytelling skills, it's nice to have, and it might help you when you're making the pitch. But in the end of the day, as we mentioned, it's about your business skills, right? And if you're a salesperson, then yes, your storytelling might help you, and your storytelling is helping you to sell your product. That would be a really good advantage, great advantage for you. But if it's just about making the pitch, so you make the pitch, but in further communication, negotiation with the investor, he might see the gaps in other things. So he might see that, for example, you're a great charismatic storyteller, but there is no market size, like market is too small, or like, yes, like other things are lacking. So when you go deeper into the negotiation, you might find that charisma maybe is already not playing such a great role as on the first stage. And speaking about this earliest stage and seeking for investor, I would say it really depends on your product, and it really depends on your industry. Because if we speak about, for example, some products that really require a lot of money, a lot of investment on the early stages, for example, it happens a lot in medtech, in pharmaceuticals, or in hardware when you're producing something. In these cases, you might really need investment on the early stages. Even to create your prototype or to test your medicament, you might need a lot of money for that. So in this case, yes, you might need already on the earliest stage to go and speak to the investor. But if we're speaking about digital startups, about something that you are doing online, then in this case, it's only your time. It's your time and time of your CTO. If you have one, of course. If you don't have, then of course you might need some money to involve some external technical people in your team. But it's also another skill that you might need, and you actually will need as a startup, is to invite people and involve people, co-founders and just employees who on the earliest stages would be ready to work for free, would be motivated to work for the idea, to develop your idea. So this is also one of the skills of the co-founders, of the founding team, that you would need a lot. Okay, any other
no
questions?
Comments. I see the question from Alexander.
Or maybe comments from your side, Nelly.
About incubator and accelerator. How should entrepreneur choose where to go, to accelerator or incubator? What is the difference? Well, actually, Alexander, the difference is pretty simple. In an accelerator, the main task is during the very, very short period, show the maximum traction, the maximum development in the startup. So, for example, if it is SaaS startup or any other kind of digital service provider, it could be the growth of the users database, the users amount. So in accelerator, the mentors and all the team will insist and will push you to make the maximum growth, to maximum traffic, maximum pre-sales of your service or product during the minimum time in order to demonstrate to investors the dynamic of your development. So accelerators, maximum efforts in minimum time. In incubators, the focus is mostly for the general issues like the development of the MVP, the development of your hardware project, the improvement of your technology and product, and the improvement of the business processes. So incubators, they do not focus on this speedy traction. Incubators are more about the general direction of the startup development and the support for the technological side. So I hope I answered your question, Alexandra. Kate, do you want to add anything to this part?
So for this part, it's fine. There was a question: why do investors invest only in two-founder startup? I would say that it's not like always the rule that only two founder startups, but as we mentioned, lots of investors see a risk in a startup when there is only one founder, because we are all humans, and first of all, it might be connected with lack of motivation at some point. So this is one like alarming point, that it's one founder. So if especially this founder is not experienced enough, if he didn't have before that other success stories in his background, in his career, then it might be really like risky for the investor. He might say, okay, now he's very motivated, but what will happen after half a year if he's not getting enough demand, or like if he faces first difficulties? So it might be a risk, because when there are two people, they can balance and they can compensate, they can motivate each other and help each other to go through these difficult times. And another point is that when you have, in Russian actually there is a proverb that one head is good, but two heads are better, which means that when you have the expertise of one person, it is nice, it is good. But when you have expertise of two people and just different insights of from different points of view, then it might also help for at some points to find the right directions. But it doesn't necessarily mean they would never invest in one founder team. Nowadays, startups are searching for investors, and on other end, they are searching for co-founders. Yes, it is true. It happens that startups are also looking for other co-founders, like let's say entrepreneurs are looking for partners. That's why they attend some kind of events like hackathons to meet other motivated and people who are looking for new challenges, looking for new initiatives. So yes, there are also like events like this to find each other. Okay.
There is a question from Ayal regarding the funding from European funds. Yes, we have a set of European funds, Swiss investors and European investors on InnMind. So Ayal, you are welcome to register to dig through the list of investors and to get in touch with them. But first, don't forget to make the profile, the filled in profile of your startup project. Yeah,
I will just add about accelerators. I will share with you now the article about accelerators and quite critical approach towards this organization.
I just wanted to say that I don't see any other questions. Maybe I have missed something, but if you really don't have any more questions right now, guys, I suppose that you may be a little bit tired listening. I hope we have provided you with enough and valuable information regarding this topic. Please don't hesitate to give your feedback, because for us it's really important to know what was useful, what maybe was too much, or what we missed. So please don't hesitate to get in touch with us. You know all our contacts. On InnMind there is a chat, and we receive directly to our inbox the messages from the chat. So you can send it anywhere, or you can send it directly to us through InnMind platform. And if you love this webinar and if you find it useful, we will be very pleased to see your comments and feedback on social media. Share it with your friends, and it would be really good. If there are any other questions we did not answer yet, please don't hesitate to send them to us. And if we will have enough requests, for example, we didn't have enough time to discuss about startup mistakes. If you would like to make to have a separate webinar regarding startup mistakes, we're here to help. So just request.
Mm-hmm. So yes, thank you all for the attention. And you already have in chat, you have the link where you can leave your feedback. Feel free to send your comment there on Facebook or to us directly. Thank you all for the participation, and we look forward to having you with us in our next webinars. And I saw in chat you also have the calendar of our next
Thank you, guys. It was really a pleasure to see you. Unfortunately, we don't see your faces, but we really enjoy your comments and your questions. Thanks a lot for your participation and for your activity. Yeah, or morning. Bye.
Thank you. Goodbye. Have a good evening or day, depending where you are in the world. Goodbye.